Good afternoon. This is the Elliott Wave weekly update for the Dow Jones Industrial Average being recorded on Saturday, August the 2nd at 1 p.m. Pacific Daylight Time. I'm going to start here on the monthly maximum chart that I have. So this is my largest picture that I have, and the count goes back and starts with the grand supercycle. So this data, for those that may be new to my work, goes back to 1902. So this shows us about 123 years of data. And the market, believe it or not, remains in a very long-term bull market, according to the count that was actually started by R.N. Elliott himself. I put these grand supercycle waves together based on his charting, which I have copies of his original work, which showed where he had put Grand Supercycle Wave 1 and Grand Supercycle Wave 2. And from that, I then filled in the blanks accordingly. So we can start with that Grand Supercycle. Grand Supercycle Wave 1 completed in 1929, just before the crash. And then we had Grand Supercycle Wave 2 complete its low in 1932. So we had about a 3-year period of very strong decline before we reached a low, Great Depression set in, et cetera, et cetera. So what actually is going to be in this grand supercycle wave 3? Going to be 5 waves of supercycle degree, of which we have 1 and 2 complete. What's going to be in supercycle wave 3? There's going to be 5 waves of prime cycle degree, of which we have 1 and 2 complete, and we are close to be completing cycle wave 3. So in essence, we're in cycle wave 3 of supercycle wave 3 of grand supercycle wave 3. So basically, folks, on an Elliott basis, we're completing the 3 of the 3 of the 3, the third of the third of the third. So once this grand supercycle wave 3 is complete, we're going to be looking for a grand supercycle wave 4. Now, this will be a large correction. This will be a multi-year correction if the time sequences follow through as they have in the past. So within that cycle wave 4, Elliott taught us, teaches us, continues. We rely on this message that when a fourth wave is in motion, is in force, it will find, and this doesn't matter on the degree, it's just a fourth wave in motion, it will find its terminus at the fourth wave or within the price territory of the fourth wave of 1 lesser degree. We will be counting at that time, when this is cycle 3 is done, we'll be in a cycle 4th wave correction. So what would the expectation be? Where will cycle wave 4 find its terminus? And this is over a pretty long period of time. Okay, so it's going to find its terminus, its endpoint, within the price territory of the primary fourth wave. That is the fourth wave of 1 lesser degree off of cycle. And here is primary 4. It's the green box right here. So again, that's what we're looking for. Ultimately. But in advance of that beginning, we're still in that finishing stage. Let me break it down right away, bring it into the 5-year weekly chart, which shows that we're in intermediate wave 5, right? So there are going to be 5 waves of intermediate degree within that primary 5th wave. And the primary of the primary 5th wave, we can say that it's in intermediate wave 5. And what's going to be inside of intermediate wave 5 are 5 waves of minor degree, of which we have 1, 2, 3, and 4. So in case you're following along here, what does Elliott really state? What is it all built on? They are building blocks. Sequences of 5-wave structures in an impulse move build to 1 degree up. So they continue to build and fill in all the blanks up to and including our highest degree that we go. Right now, we're looking for the completion of an intermediate 5th wave, But we can actually break that down one more because inside of intermediate wave 5, there'll be 5 waves of minor degree, of which 1, 2, 3, and 4 are complete on my calculations. And so minor wave 4 completing on April the 7th of 2025. So inside of minor wave 5, which is minor wave 5 completes, it'll complete intermediate wave 5, primary wave 5, cycle wave 3. But before that, there are going to be 5 waves within minor wave 5, 5 waves of minute degree, of which we have 1, 2, and we just completed 3. So we are now starting down on a minute 4th wave correction. What will follow is a minute 5th wave rally back up again to new all-time highs here in the Dow. And it's that minute 5th wave up, which will in turn, once it's complete, it will complete in turn the minor 5th wave, the intermediate 5th wave, the primary 5th wave, and the cycle 3rd wave. So we're getting close. We're getting closer and closer as we progress forward. Now, time factor. This is an important one, right? How long can this go? Well, some of what my work has been showing and the algorithms are dictating or saying to us that we could get this surge higher within the fourth quarter of 2025. A lot of it also points to December of 2025 of seeing a stronger surge up. So it's like, okay, how is that all going to fit into? We're working on a minor 5th wave, of which we're now doing the minute 4th wave. So we have one more minute 5th wave up. Could that last another 3 months? Well, let's consider. I'm going to bring this down to the daily now. We're going to take a look. Here is the low for minute wave 2. So minute wave 3 lasted 3 months. 3 months and 10 days to be exact, right? April the 21st. This is July the 31st. Actually, it's July the 23rd. So actually 3 months. We have 3 months that we have for minute wave 3. Could minute wave 4 take a month and a half or maybe 2 months? It could. So if that's the case, August, September. And then we have minute wave 5. Could that take another 3 months? Yeah, it could. So the time factor can be well included. But remember, part of what the algorithm is really saying also is that we're looking for that major top within the fourth quarter of 2025. There is a possibility it could extend out and go into 2026. I don't think it goes very far into 2026, should that be the case. But here we are. Now let's get down to where we are today. So we have minute wave 1, 2, 3 completed on the 23rd. Excuse me. And the other indexes, it completed on the 31st. Whereas here, on the 31st, we were already starting down. 31st is right there. No, 31st is right here. We were already starting down. In fact, we were well on the way of starting lower. So the Dow had a little bit of a head start, whereas the S&P and the NASDAQ made their new highs to complete minute wave 3 on Thursday, on the opening on Thursday. So this was actually 8 days prior, on the 23rd of July, excuse me. So from there, we put the 3, we put the 5. Now, what are we looking for? Well, I'm going to put my box up, which I've done on all the others as well. And that's going to go to right there. And we're going to go here and put that color in there. So what we're saying is that this is where we believe the minute 4th wave will come in and find its end point, its terminus, within the 4th wave of 1 lesser degree. We have minute, 1 lesser degree is minuet, and there's the box. So it actually goes from that high, the box goes from 43,115 down to 41,981. That's the box we're looking for the completion point. So where are we inside of that? We can come off the daily now. Here we have, first of all, we have our markers. That low for a minuet wave 4 is just below the 0.382, which is the most common for a fourth wave. The next most common on a Fib basis would be a 50% retracement, and we see that marker down here as well. So first, 42,307. Then we have the low here, which is 41,981. And then we have the next marker, the 50% at 41,456. So those are our markers for the fourth wave, the minute fourth wave coming down. Let's break it down, look at the hourly chart, and we're going to look and see where we are in this whole thing. So you'll see that I've kind of put some other additional wave patterns in here. So I kind of may switch that around, but I was thinking I had 1, 2, 3, 4, 5. I'm saying that's wave 1 or wave A. And this could be wave 2 or wave B. And then we have this stronger low, which was Friday, as wave 3 or wave C. Now, if that's the case, we could have an ABC down still for minuet wave A of minute wave 4. Now, let's look at the difference between if I count it as 5 waves down or if I'm going to have to count it as 3 waves down. If it's an ABC down, that puts the Dow in the position where that B wave rally could take it up to flat. So in other words, there are two basic structures that can take place within a correction. One is at a 535, and that's just going to be an ABC down, and that's considered a zigzag. Very straightforward in terms of what that's all going to look like. Well, then what we have on the other side is that we have an ABC that's the structure, but it's more of a flat nature. So what I mean by that is wave A and wave B will basically go back to the start of wave A or in that area, and then wave C again comes back down to the same area that the A wave came down. So flat. It's like A, B, C, everything coming into line and stays flat. Now, that would be what would be behind if it gets labeled ABC. It's still going to be wave A. But if I'm labeling it 1, 2, 3, we have a 4, we come back down in a 5. Well, then we're likely going to come down closer. Probably, I think in here about 42.9, maybe 43,000, because then I would have to probably move this up to here, put the 2 there, 1, 2, 3, 4, 5, put the 3 here. This is a 4. And so in that case, you're really running your fibs here to here and then over to here, and it's going to come down into this area. So we're just going to let this trade out to see exactly where it comes in, but I wanted to show you both sides. So it could be 1, 2, 3. We got a 4, come back down in a 5, and then we're going to label it wave A, and then it becomes a zigzag. That's the big difference that I want to talk about. That it's either going to be, if it's 5 down, then it's a zigzag, A, B, C, and we'll likely end up right in here or possibly a little bit lower. So ultimately, I think we could end up down at 42,300 after hitting a high on the futures basis of 45,015. So it's a pretty strong correction. And then we go back up in a minute wave 5 to new all-time highs. And then I have this marker up here, which makes total sense. Again, putting it back out on the daily so we can see it. That's going to be minor 5. So here's 4. There would be minor 5, 46,183. We'll fill in that blank as this starts to fill in itself and get the levels for my new fifth wave up, see how they compare to there. We'll also likely can add, going back out to this one, we can start to add for a intermediate fifth wave, which I took down, but we can put them back up. And then we'll also be adding likely one additional for a primary degree. So because the other waves, this whole sequence higher has been very, very dynamic, that your calculations are going to be of fibs like 4.618, 5.618, et cetera. And those are pretty large numbers, but it's still just doing the math that would indicate the same levels. They're just of a larger calculation. All right, so back down to that hourly chart. So we're looking for the A to finish in the B. Now let's take a look at our moving averages. So here on the hourly chart, the Dow, in alignment to continue to go down, right? There's the 200, there's the 78, there's the 30, there's the 8. The 8 just starting to look like it wants to curl over and go flat a little bit, which might be that we get a little bit of up, but I don't think that's going to happen. I think we might have a very slight higher opening, but then the market comes down and we get into these areas down here. Now, also what I'm going to be including inside of today's update is that I'm going to include an article that really goes over, are the tariffs really affecting or hindering or helping, or what are they doing to the U.S. economy, and what's really behind the scenes to what's happening in our trade agreements. It's a very interesting article, sheds some light on everything that's going on and what we need to pay attention to. Something else I think that needs to be paid attention to is if the president is going to be allowed to fire the person that put together the numbers for the unemployment numbers that came out on Friday that he didn't like, what does that suggest? Right? So as somebody said, you don't kill the messenger. All she did was report the data. It's the data, not the messenger. But he's going to decide he's going to replace it because he's going to find somebody that will put it in the language and say what he wants to say. I'm going to see how the market wants to react to that. So then suddenly what happens to the world? We start looking at the US and go like, I don't trust your data. Your data is not the truth. Your data is being made up. We'll wait and see on that one. All right. So going over to the Dow to the YM, let's go look at the futures. Now we can get this posted. So same deal. I have the 1, 2, 3, but in this one, it's a little bit cleaner that we could actually put the wave 1 here, the wave 2 here, the wave 3 here, and not call it an ABC, but I'm leaving it that way because of the cash market. But here it's a little bit cleaner that we have a 4, and if that's the case, I can put this in. That comes down to there, and then it's going to go over to there because I think that high may not be taken out. And then I'm going to go like this. We're going to put it in its correct color, put this in as well, and then see what those levels are basically going to be telling us and what it should look like. Okay, so coming off, 618 is in play. Okay, and 1.618 stays in play, but I think we might not get past that, so I'm going to leave that off for right now. So here we have it. So if we get wave 5, so there's 3, if that's going to be 4, which I will actually go ahead and put in so that we see it. I left it off before because I thought, again, because of the cash, it wasn't quite as clear. But let me just stick that on there so that we can see it and know what we're talking about here. So there's the 4, got that marker. The first one, 618, excuse me. The most common is 100%. That's 42,957. Second most common is 1.618, which I'm now going to put back on just in case. And that comes in at 42,403. By the way, it's just below 382, which it can do in wave A. Can do. And then we rally into B and come back down to C and exceed it. Okay. So leaving it as is, if it's going to come down in 5, most common, 42,057. Second most common, 42,403. And then third most common, 43,300. That's 0.618. And it can do that, still be a 5, and then we get the B wave. So that's kind of the picture here. Also, same deal. So there's really not too much. It's kind of just, it actually is a little bit cleaner in the Dow, which is only 30 stocks versus the NASDAQ or the S&P, which are 100 and 500 respectively. So that's where I'm going to kind of wrap this up for right now. Keep it short, keep it concise. We're just looking at this fourth wave, the minute fourth wave. Also, check out the article. Leave a comment if you choose. Also, leave comments on the count. If yours might be different, please include it. I am always very welcoming to other people's views, and their counts, and we can compare, and we'll see what happens after that. All right, that's going to be it. And the next update on the Dow will be next week.